A little less than 5 minutes till the opening bell, and we have a futures rebounding here this morning. All three major averages indicating a higher open at the moment, although we have to offer that disclaimer more and more these days, don't we, Brian Sozzi, because of the volatility, even the intra-session volatility that we've been seeing. I've also been watching a couple other indicators tied to the Russia-Ukraine situation, even as the U.S. futures are improving. RSX, of course, is one of those. That is that Russia ETF that we've been keeping our eye on. That has been, it's designed, of course, to track Russian stock, and it is still trading lower this morning. And then, of course, we've both been watching the commodities very closely to see what kind of moment-by-moment reaction we've been having there. At the moment, crude oil is down, gold is down, nat gas is up a little bit. So this is sort of it's not even a day-by-day, it's really a moment-by-moment trade that we are seeing, Saz, in these markets.
No, it is very much moment by moment, Julian. And we saw it yesterday in yesterday's session. At one point, we were on our show, we were slightly positive, I believe, on the S&P 500. And look where the major indices ended yesterday as some more negative headlines on the Russia-Ukraine front came to pass. But still, you could tell even by this opening, some of these early bids here in the pre-market, this is a very much a nervous market that is very concerned about the outlook for corporate America, among many other things.
Yeah, definitely among many other things. As Jeff Curry of Goldman Sachs was pointing out to us just a little bit ago, global supply, energy supply in particular, is very, very tight. And even if we, for example, here in the United States don't get our oil from Russia, we get it from the United States and primarily from the Mideast as well. But if what's going on in Russia is pushing up those global oil prices, that obviously will have a ripple effect here in the United States as well. So all of this affecting the inflation picture, and as we were talking about with some investors yesterday, could potentially affect the Fed picture as well. The Fed remains in a very tight spot because if all these input costs are going up, inflation's going to keep going up, which means the Fed needs to move. But if there are geopolitical concerns, does that then reduce the Fed's ability to raise by 50 basis points at its March meeting?
Yeah, you don't need anything from me. I think you just pieced it together very well, Julie. I'm just, here for show. But I do think you make a very good point. The Fed is in a very tough spot. And this is what a friend of the show, Mohammed Al-Arian, wrote in a new FT op-ed, I believe it was yesterday. He's concerned about a policy mistake from the Federal Reserve. And we talked to Mohammed last week about it. And he's right to be concerned. So you're going to have the Fed now trying to bring down inflation just as the economy here in the U.S. could slow sharply because of rising energy prices, because of what's going on between Ukraine and Russia. It's a terrible spot to be in, but really underscores, Julie, how far behind the Fed is here in trying to get inflation under wraps.
Yeah, good point. As we see a little bit of flattening of the yield curve this morning, I want to pick up on the third thing that Matt Maley says is a concern for the markets, and that's slowing earnings growth. TJX, Exhibit A, perhaps, of that this morning, the owner of TJ Maxx and Marshalls, that stock is trading lower. Company's not even given a forecast for fiscal 2023, right? Because it is seeing elevated uncertainty about how long its costs are going to stay high here. And this is even after the company's fourth quarter numbers, as we just saw there, missed estimates. Gross profit margin also missing estimates, Saz.
Hey, when you're selling leftover junk that can't be sold at department stores like TJX does at TJX and Marshalls here, every penny matters here. And this company is another retailer seeing large amounts of inflation. Also, too, first quarter outlook did not like it, Julie. Same-store sales in the U.S. guided up 1% to 3%. That is just not going to cut it.
And they also made an announcement about returning cash to shareholders, boosting the dividend by 13%, a buyback of $2.25 to $2.5 billion. So I don't know how much the stock would be down were it not for those announcements, but you can't look at that drop and see that cash return is mitigating the effect of this earnings report in any significant fashion here. So that stock trading lower, stocks overall indicating a higher open. And there we have the opening bell on this Wednesday morning from the NASDAQ and the NYSE. Brian Sozzi going to have to pick some confetti out of his hair perhaps in the next few moments. I don't know. But